You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back once again for the Wild West, the madness. That is Education Wednesday. Yes, it is time once again for Options Boot Camp. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging, and Education Wednesday rapidly turning into the latest doubleheader day on the network because the producers hate my voice, listeners, but you know what? They love you folks out there. They want more content for you folks out there. So if you don't have enough Dans in your life on Education Wednesday and you're subscribed to the full network, then by all means, come on back in a little bit, hit next on your device of choice after you're done with the old OBC, because you have the Futures Rundown waiting in your hot little hands with our good buddy, Mr. Dan Collins, making his return to the network for the first time in a while. We're going to go deep into futures on that one, probably get a little bit crude as well, hint, hint. So a lot of fun to be had there. Again, the only way to get that is to either subscribe to that individually, which is a pain in the butt. Let's face it, you got to go out and subscribe to 12 shows nearly individually. Who wants to do that? Just subscribe to the full network feed. It's all there waiting for you there, listeners. And then you could just pick and choose whatever floats your boat out there. And of course, if you want to go above and beyond, you want to join us for awesome pro Q&As like we had with my buddy Dan's nemesis, as he calls him, the deadbeat Uncle Mike, for welching on their election special bet from many years ago. Then you could check out all that fun over there on the pro, theoptionsinsider.com/pro. Speaking of the pro, I see you in there, Option God, saying you're first. Okay, I'll give you the feather. You're first in the chat today. There you go. Congratulations to you. I love that it's a race every time. You win today, Mr. Option Guy. If you want to join the rest of the folks there in the live, get access to all that good stuff. And also, today's the day. It is the 2nd. That means it is time to give away some goodness over there on the old pro trading crate side. Only one place to get access to those giveaways as well. theoptionsinsider.com/pro is the place to go. And if you like what you hear, remember, throw a like, a star, a comment. It's a really easy way to support the show out there. Just like this week, Ace. Ace said this one. I like this review. I like this guy. He says, "What up, big dogs?" I can't read it with a straight face. All right, let me try that again. "What up, big dogs? I'm digging Dan's sleepy vibes on the show. He seems pretty chill. 5 stars." So there you go. Thank you, Ace. And everyone else who takes the time to rate and review us. Of course, he's talking about my cohort, the sleepy one, apparently, a.k.a. the black-hatted one, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, what do you say? Your chill vibes giving us 5 stars, sir? What do you say?
It's kind of weird, but thanks, I think.
I guess, hey, 5 stars. He must like something out there at the end of the day. So, you never can tell with some of these reviews. They're kind of funny. But you know what, listeners? If you, too, are a fan of Dan, you like his chill vibes, you can't get enough, then I got a sweet treat for you. Another reason to be subscribed to the full network. Coming out tomorrow, another show on my network, Wide World of Options with our friends over there at OIC. I have heard some snippets of it, and it features this week, and this month really, none other than my compatriot here, Mr. Dan Passarelli from MTM. So if you want to hear him hold court on all things 0 DTE, ETFs, and indices, check that out. It's going live tomorrow on Thursday. Wide World of Options is called. Again, another reason to be subscribed to the full network, because you'll have it in your hot little hands instantly the second it goes live. So if you can't get enough Dan, what do you say, Dan? A double dose of Dan this week. Are you excited by that?
Yeah, man. That sounds pretty darn swell. Sure.
There's those chill vibes coming back out again that our friend says. You know, we're going to turn it up to 11 right now, though. We're going to wake Dan up because, Dan, it is the second. It is time for our monthly giveaway. We like to do it here on OBC because the listeners like it, and it does wake up sleepy Dan from time to time. So, Dan, the random number generator is running. You tell me when to stop, sir, and we shall pick the winner for the September Pro Trading Crate. Have at it, sir. The floor is yours.
All right. You ready? Ready? I was thinking this time I would probably wait like 11 or 12 minutes, though.
11 to 12 minutes. All right,
yeah.
then.
Can we just have some silence on the podcast?
Let's just have 11 minutes of silence. How about instead of that, let's keep on rolling into the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, well, Dan is puzzling over when he's going to choose our winner. I will go through some of our questions of the week right now, buy him some time to mull. Let's go out to last week's question first, pay that off. We asked you last week, ask and you shall receive. You folks have been on us since January, since the ETFs approved. When are we going to see the options? When are we going to see the options? Well, spoiler alert, we finally got approval for the options on the Bitcoin ETFs a little over a week ago now. SEC sneaking it out heading into a weekend, which is interesting, not inauspicious at all. But we said, hey, ask and you shall receive. After months of waiting, the SEC finally approved options trading on the Bitcoin ETF from BlackRock, ticker symbol IBIT. We asked you a very simple question last week. Do you plan to trade IBIT options when they are listed? Heck yes, hell no, or I prefer something else, and you can pick your poison, BitO, BitX, whatever the case. And as we expected, 63.2% saying heck yes. Actually, it was a lot firmer. Right towards the end, I think some of the Uncle Mike crypto naysayers snuck in there because 31.6% saying hell no, you're not down for it. And then 5.3% of you saying you prefer your BitOs and your BitXs of the world. Dan, what are your thoughts on this? And do you have a winner for our crate yet? You're going to say
stop.
Oh, bam. There we go. Okay, bam. Okay, perfect. I will announce who that one is in a second. But first, give me your thoughts on the results of our poll. Does that surprise you, sir?
Yeah, a little bit. Yeah. Kind of interesting, really. I'm not always surprised by the polls, but every now and then I get a little thrown off by
I was surprised that it was as low as it was. It was like 75% throughout most of the week, and then it ticked down a little bit at the end. So again, I blame that stick in the mud Uncle Mike, your nemesis, for bringing it down right towards the end to 63.2%. Oh, by the way, the person Dan picked when he said stop, that was one of our newer members, Tyler. So congratulations to Tyler out there winning the September Pro Trading Crate. Our producers will be in touch post haste Mr. Tyler, congratulations to you. If you want to join Tyler on the old winning side, the victory side, only one place to go, theoptionsinsider.com/pro, the place to go to learn more. A lot of folks chiming in, like Mal here says, I got to look into IBIT. It's currently only into BITO right now, so I'm guessing he chose other. I get it. BITO has its pros and cons out there as well. And our question of the week this week, Dan, an interesting one, a contentious one. Maybe. We'll see. We're asking folks, the election is looming. You may have heard there's an election in the offing, election imminent. What is your trading plan through the election? So, and if you have a different suggestion, by all means, hit us up. And we gave you, 4 basic suggestions. You're going to stay long, kind of stay long the market right now, kind of stay the course, not really change up too much. Or maybe you're a little bit skittish, you're going to get flat or go to cash. Or maybe you're even more skittish, you're going to get short or really start hedging your portfolio aggressively. Or maybe you can be a little bit skittish, but you're going to stay in the market, maybe, but just trade small, kind of intraday only. Dan, which way are you leaning and which way do you think our audience is going?
Well, I mean, for me, I'm picking my spots, I guess is the way that I would put it. I'm not entirely long from an investing standpoint. I'm partially in cash on my investments. And I'm looking for dips, whether it's the election or, things that are outside of our country as well. So, yeah, I've got some cash to buy some dips, but, not totally in cash.
Not totally in cash. Well, our audience, once again, our audience is having a hard time making up their mind, which I guess maybe is a sign that our questions are deep and biting, cause them to think. Because once again, we have an even split, Dan, 39.1% each between stay long, stay the course, and also trade small, intraday only. So those are the two kind of tied for first right now. 17.4% for a distant second for getting flat, go to cash, and only 4.3% right now saying they're getting short or hedging their portfolio. At Options, the place to go to make your voice heard. Speaking of making their voice heard, Dan's been waiting all week to make his heard. It is time for the Market Taker question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker question of the week.
All right, Mr. Dan, I set the table. The floor is now yours. What's your cue of the week for our folks here, sir?
Yeah, so this is something I've been talking about a little bit lately. I might have mentioned this a few weeks back on this show, but, where can you find cheap volatility these days? And you can still find some cheap volatility in the same name that I've been watching and getting in and out of straddles on for a few weeks now. And that's SOXL, which is the 2 times semiconductor ETF. Take a look at that. It's just, we talk all the time about how straddles are challenging. We talked a lot about straddles over the past few months, how they've been getting a little bit easier. And when you can find opportunities like this where the volatility is still low and you just see how much the underlying has been moving, it presents some really, really nice opportunities.
Yeah, you were talking about that a few weeks ago, too, going long some straddles. How's that been working out the last couple of weeks? You've kind of just been gobbling up straddles. They've been paying off pretty well?
I've been in and out of them, overall making money. It's always nice when you have a straddle on to get those big old home runs. Haven't quite had any of those yet, but definitely able to overall take some profits. Be really, really careful with the risk management and don't be afraid to take losses quick and small and early, but let those profits run on the ones that are working out.
And you're going near daily to going weekly straddles. What's your duration here?
I always like to go at least 3 weeks out, 3 to 6 weeks out. Even if my time horizon is like 1 or 2 weeks, you just get the lower theta, and yes, you get the lower gamma as well. But it's just nice to have a little bit of extra time to let it play out if it's starting to play out.
Interesting. Longer term straddle, 6 weeks. You don't hear you talking about that time frame too often. So everyone's so obsessed with 0 days. So I don't know if I can even wrap my head around 6 weeks. It's an eternity. That's who can think that far at this point, listeners. Crazy. We passed the election. A 6-week straddle, sir. Crazy town out here. All right. Interesting stuff. Listeners, are you down for a little bit of Soxal straddles? Sounds like Dan is, and he's been talking about them for a few weeks. I got a feeling a few of you have been maybe dipping your toes into those waters. If so, hit us up. Let us know what your methodology is, how it's been going for you. Let's keep rolling out here. By the way, Dan doesn't talk about straddles too much, so just something to bear in mind when we do talk about long straddles on this show. Usually it probably is a signifier of something, so just bear that in mind. As we keep on rolling, as I said, this show is available on just about all platforms under the sun, including the tubes. And this week we got Jayant Bhandari, the OG. So the OG writing into us. How many? We all know 15 at least Jayant Bhandaris, but he's the OG. He writes in to say, "Sir," I like it. He's very polite. "Sir, long-time listener." Well, thank you. Thank you for listening, Jayant. He says, "Any tips for ETFs for crypto?" So I'm assuming from your question here, Jayant, that you're kind of referring to what we were just talking about, the approval of options on the IBIT. So that's going to really change the game. I'll lay out a couple of things here, then I'm sure Dan has some thoughts he wants to share as well. First off, we're all kind of hot and bothered by the approval of options for IBIT. Allow me to unfortunately throw some cold water on that right out of the gate here, which is that they were approved by the SEC. Doesn't mean we're going to see them tomorrow or really anytime soon. You know, talking to people out there, there's still a lot of I's to be dotted and T's to be crossed behind the scenes. It's just the devil's in the details with these things, as they always say. OCC has to come up with a plan for clearing these. There are still some bits of regulatory minutia that need to be tackled. So it seems like the approval was kind of the easy part, and that's done. So at least the process has begun. We will see these. That's nice. Whether it's this year or maybe early next year, sounds like maybe the latter. But hey, you know, I'm willing to be proven wrong. I'm willing to be optimistic out here at the end of the day. So I do hope we have these in our hot little hands, but before the end of the year. But it's not going to be like we see with these IPOs where, you know, the IPO, the stock goes public and 2 days later we have the options in our hot little hands. In this case, they were approved well over a week ago. Still no options. So just maybe, unfortunately, dial back some of that enthusiasm. That doesn't mean you can't play in the rest of the space. You have your BitOs, your BitXs. There's a lot of different, like everything else in the world, there's a lot of different flavors of crypto ETFs you can choose from. If you like levered, there's BitX. If you like regular one-to-one, there's BitO. These are all options on the futures and ETFs that use the future. So a lot of them are going to suffer from some of the same issues we see with some of the other Franken products in whatever the commodity space, the vol space, whenever they use futures to try to replicate some sort of underlying position. There are going to be issues with roll yield and everything else, which is why BitO has that massive distribution that it does all the time. That could be great if you like a hefty dividend. Also, talking to some folks on our Crypto Rundown show just this past week, they were looking at the total return numbers for BitO versus the spot, and they were claiming it's underperforming by about 5%. So some of that has to do with that negative roll yield at the end of the day. So there's something to bear in mind. But the plus side of trading options on these things are all the things we talked about with crypto in the past. Hodlers love themselves some crypto, so they tend to bid up the call skew. So that means if you want to do, let's say, your traditional covered calls, it's going to be attractive. You're going to get a decent amount of premium for those. I was just talking to some guests on our Crypto Rundown. I think they were talking, it actually was about Bitcoin, and you could say you could sell the pars, the 100,000 strike calls in some of these venues out there. Most of these are overseas now, like Deribit, so not available to the U.S. listener. And you can get somewhere around 14%. And that's with Bitcoin around 60,000. So you can talk a 40,000 handle run of appreciation if you have the underlying and the 14% on top of it with the covered call. That's a tremendous amount of premium for not going that far out in time and certainly not that close to to replicate 14% in your traditional equity option, you have to sell pretty much near at the money calls week after week. So just something to bear in mind if you like those strategies. That means verticals Also going to be attractive. You can leg into those for lower prices than you can in other names. Also, the flip side of that, the puts aren't usually tremendously bid outside of some of the really dark times of the crypto winter. So that means if you want to go in and, let's say, buy the underlying and then buy tight protection against it, looks pretty good. It also sets up favorably for callers. You might be able to leg into callers for a credit with the bid to the call wing out there. So some things to bear in mind for pro tips for coming into using the options on these crypto ETFs. Just something to bear in mind out there. There are some interesting rules of engagement, but that juicy call wing makes them attractive. Dan, anything you want to add here for our buddy, longtime listener, Jayant Bandari, the OG, sir?
Yeah, I'm gonna go a little bit of a mile high view just because I think it's the best tip that I can give with any of these ETFs. Just make sure you really deeply understand what they're holding and if it's a future, if it gets rolled and when it gets rolled and how it gets rolled, and if there's a contango issue there. With the new ETF that'll be coming online, I don't know. I mean, I guess it's an ETF on the spot, but like there's some stuff, there are some ETFs out there where it's supposedly the spot, but it's really not all the spot. It's like other things too, like, some of the volatility products like VXX actually holds some calls in there or something or other. It can just be pretty complicated. So make sure you deeply understand them. And then when you do, like, you're a step ahead of everybody else, and like you literally have an edge trading it. So it's not even just like a cautionary tale. It's, be on offense too, deeply understanding these products so that you can construct trades in such a way where you can stand to have more winners than losers, have bigger winners than losers, etc.
I think you're referring to our beloved SVIX, which does own some VIX calls as kind of a bit of a protection. That's the inverse vol product. And you're right, It is interesting. That's one of the attractive things about this IBIT, Dan, is it is ostensibly going to, quote unquote, hold the physical, right? So it's going to be kind of analogous to GLD versus another ETF trying to replicate a gold position using the futures. It's not going to suffer from the roll yield because it will hold the spot, hold the underlying. That's one of the things that makes it attractive to people. Hopefully we won't see these crazy, distributions have to materialize as a result, unless you're, a big fan of the BITO dividend, then by all means. But yeah, in general, that's what makes it attractive. So people are excited for the IBIT. Like I said, unfortunately, no information on when we're going to see that, and it doesn't seem like it's going to be anytime soon. But appreciate your enthusiasm, longtime listener, Jayant Bandari, OG, coming in via the tubes. Let's go out next to, 2Xer. Interesting handle, 2Xer. He or she wants to know, is there anyone out there offering absolutely free options trading? He's asking for a friend. So he's not asking for himself. He's asking for a friend, Dan. So tell 2Xer's friend, where can they go to pay absolutely nothing for options trading?
Options trading or training?
Trading.
Oh, yeah. Well, I mean, don't we have a sponsor of this show that takes that even one step further and can sometimes pay you for trading?
They do give you a rebate over there on Public. But yeah, the costs are about as nominal as they're going to get. And of course, if you trade pretty actively, they will actually give you a rebate out there. So that is an attractive thing. You can check it out for yourselves. Public.com/options bootcamp. Another easy, free way for you folks to support the show. Just go to that URL. Just going to that URL supports the show. Of course, you can give them your feedback on what you'd like to see out there, too. And that rebate does make it attractive. So I guess from that perspective, Dan, you are correct. For 2Xer's friend, they can not only get it free, but actually a rebate. So kind of attractive. So, Dan, excellent point. That's why we have you on the show, Dan, for these excellent points you make out there. So there you go, 2Xer. Your friend should be happy with that. I mean, a rebate's even better than free. Got to kick the tires and light the fires to find that over there in the land of Public, public.com/options bootcamp. Next up, we got Tim. Tim wants to know, do you think you can do a futures options episode for the kids out there? Who are the kids? Dan, did you know the kids are into futures options? That's what the kids are all into. They're into, the Minecraft and the Fortnite and the futures options. Didn't you know that?
I know the cool kids are, yeah.
Yes, the cool kids. They're into the WTI futures options. That's the hot thing out there with all the kids on the streets these days. I didn't know the kids are into that. Well, Tim, we can do an episode here about that if you are so inclined. I believe we have in the archives in the past. I will have to go check. And, we do have, I'm not sure if you're familiar, Tim, we do have over a decade's worth of shows that you could search through. Tell you what, I will do some searching while Dan is talking. But luckily for you, Mr. Tim, we do have, by the way, I just did a quick search right now. Yes, I knew we had a recent one. Last November, Tim, episode 265, things to watch out for when trading futures options. Bam. There you go. Ask and you shall receive. Dan, is that not quick service or what, sir?
That's pretty darn quick, Mark. Tim, you got to go out there and binge, baby. You'll find those episodes.
Yeah, just go into the archives. If you're having a hard time searching the archives on whatever platform you're on, you can always find them all on our app or our website. Great place to get everything. It's all there. We don't hide anything on our website or in our app. So in this case, all you have to do is go back to November 29th of last year, episode 265. We also have an entire show on the network, Tim, called This Week in Futures Options, where we talk about futures options every week. So if you are intrigued by that, another reason, again, I always say it, but there's a method to my madness, listeners. You should be listening to the full network because at least subscribe to it, because then you can check out shows like that. So episode 265 for the boot camp. And then, of course, if you want more, then by all means, check out This Week in Futures Options. All right, let's keep rolling. Let's squeeze in a few more people because we love you all out here on the show at the end of the day. This one, Dan, coming from Angelos. He's taking things a little bit darker, turning a little bit to the dark side here. He says, if this Israeli thing takes a turn for the worst, what are the best ways to use options to protect my portfolio right now? So, Dan, understandably, Angelos, I'm sure a lot of our listeners out there, a little bit skittish with this market right now. As we're coming into the recording of the show, listeners, we've been a little topsy-turvy this week. We had a little pronounced sell-off on Monday, as he mentioned, as a result of some tensions out there in the Middle East. Things have been vacillating a bit as well. I was just talking to our good buddy on this show, Mr. Matt Amberson, yesterday on the advisors option. That'll be hitting the network later this week. And he was saying his models are pointing to maybe it's time to take your ball and go home on this market. He's looking a little bit spooked. So you're far from alone out there, Mr. Angelos, or perhaps Miss. But Dan, this is the question I'm sure you get a lot over there at MTM. They say, Professore P, I want to use options to protect myself right now. What do you recommend?
Well, I recommend having bought options last Friday, which unfortunately you can't do. But there's a saying in options hedging, buy them when you can, not when you have to. So sure, you can't buy it in the past when the VIX was down at, in the 15 handle, and when the market SPX was a little bit higher, you can't do that in hindsight. But when implied volatility ticks a little bit lower, the market ticks a little bit higher, time passes, puts get a little bit cheaper based on all that stuff. And so you can start looking at that. You can also look at things like maybe UVIX would be a good one to hedge. Unfortunately, that's a smidge pricey right now, but not that bad. I mean, it does tend to move lower over time. You pick your spots with that. If you can get it anywhere under 5, you're probably doing pretty good as a hedge. So there are some ideas right there.
Yeah, I did a little digging for you, Mr. and Mrs. Angelos, while we were talking here. Dan was talking about how sometimes it pays to buy the puts ahead of time. We did talk about this coincidentally on the network about a week before the big meltdown on August 5th. So that'd be late July, early August. We were saying, man, puts are looking fairly cheap right now for the amount of concern that is out there in the market. So that was a good time to come in. Unfortunately, about a week later, everything went to hell and the puts got juicy. And this week's sell-off hasn't helped things. Puts are kind of pricey. If you want to check this out for yourselves, a couple of ways to do this. I've recommended this in the past, Angelos. The best free way to head on over to cmegroup.com/TWIFO, TWIFO. That is the name of our show. We do with them every week, This Week in Futures Options. They'll ask you to sign up for a free account. It takes about 2 minutes. And then you have a CME account. You can do a lot of cool stuff with that. But I digress. What that will also get you access to is our This Week in Futures Options account, which you could see straight in front of you, the quick skew. That will show you the exact cost of buying a 25 delta put in, let's say, the S&P right now versus what it was a week ago. And I'm looking at that report right now, and unfortunately, things are getting pricey. If you go out, let's say, just a week, not even that long. And, obviously, vol is ticking up. The VIX, as we know, is threatening close to a 20 handle in the VIX cash. The at-the-money vol going out about a week in the S&P E-mini options is about a 16 right now. That's ticking up. And then on top of that, you're paying a 15% premium on top of that for a 25 delta put. That's up from about 11% a week ago. So the bids are climbing. If you go out about close to a month, now you're talking even more of a bid, about a 20% premium for those puts. So, yeah, unfortunately, I won't say the horse has completely left the barn, but things are looking kind of rich out there. Another way to do it, so we have our buddy, the Flow Master, joins us every week on the option block. His platform, Trade Alert, will also crunch a lot of this data for you. And if you look at, that's of course a premium platform. You have to pay for that. But looking at it right there, they measure the 30-day implied volatility skew in terms of percentile. Right now, we are at the 99th percentile from the past year for overall skew, which means when it's that high, it means the puts are expensive, listeners. So we're looking at, no matter how you want to measure it, things are kind of pricey right now to buy puts. So unfortunately, Angelos, that's the deal. Dan talked about some of the other ways you can go. You can go some of the vol products. Those are also not going to be cheap as well. Everyone knows those are surrogates for put liquidity at the end of the day. So VIX calls, they're going to be pricey. All these other ways you're going to do it, SVIX to the downside is going to be pricey. Unfortunately, that's the name of the game right now. There's not a lot of cheap ways to go about it. But if you are that concerned, it might be worth it. For your peace of mind, it might be worth it to buy something, or maybe also consider scaling back on some of those positions out there. Again, at the end of the day, it's up to you. Only you can tell, Angelos, how you feel about this. But right now, unfortunately, it is looking a little bit pricey out there. All right, we'll get out of here on this one, Dan. Another funky handle, 457RL, wants to know, Dan, how long does it take to really get good at this options thing? That's what 457RL wants to know, sir.
Well, what episode are we on, Mark?
Yeah, exactly.
It's a different time horizon for everybody else. But instead of focusing just on time, like focus on input, right? Like focus on how much effort you put into it. Because, you could half pay attention to a podcast and listen to 100 hours. And if you're only half paying attention, you're not getting there. So I think the more effort you put in, it's going to cost you some money too. I think, you'll have to buy a book or two, or if you learn better from like a online classroom scenario, get information from somebody who is going to be motivated to give it to you. Mark and I are motivated here with the podcast, but which is free. But you probably have to cleave through a good number of episodes. I don't know. I mean, I would say anywhere from 6 months of really ambitious, hunkered down study to a couple of years. If you're a little bit more casual, you got a full-time job and a family, and you can't invest that much time or money or whatever.
Yeah, I'm down with that time frame. I think a year is very reasonable. And, good is subjective, right, Dan? I mean,
yeah.
What do you need to do to be good? I mean, if you just want to learn how to be effective using options, you could do that very quickly and very easily. Just coming from the stock world, if you learn how to sell puts to get into equity positions and then sell calls to get out of them, you just learn that, Dan. You're ahead of 90% of the stock game out there already. So just very basic incremental things you could do to get quote unquote good. And now you've discovered those two strategies. Guess what? You put them together and now you have the wheel. And you're like, oh my God, mind blown. Look at how many of our listeners have written in over the past few years just discovering the wheel and their different flavors of how they like to do it. You could just do the wheel and nothing else. A lot of people do. It works. It's effective. So good is subjective. You don't need to go crazy. I always use the joke here of ratio iron condor swaps. You don't need to go 7 legs, all this crazy nonsense. Selling a put to get into an underlying or a put spread, selling a call or call spread to get out. Perfect starting point. And once you're there, once you start getting a little bit more comfortable, once you start getting a feel for how these things work, maybe you graduate into just going into verticals rather than just buying the underlying. Maybe you do some longer term stock substitution like the fig leaf. There's a lot of different ways you can graduate and grow from there. So yeah, good is subjective. You don't need to be going crazy, slinging a bunch of stuff. You can really start fairly small with things that are immediately impactful to your bottom line and then kind of grow with time from there. So yeah, take it easy. 457 RL. Start with selling some puts. Again, at levels you're comfortable buying and letting go of the underlying. That's the most basic due diligence you can do. And then let your options trading grow from there. Dan, we had a lot of great questions this week. Kind of running the gamut. What do you think?
Yeah, I know. I definitely running the gamut. I like that. I love that, when people ask questions, it means that they're interested. I take it as a compliment when people ask questions because they care and they want to go deeper and get more out of this. And I'm happy to give it to them and honored that they're listening.
And Dan, if they do want to go deeper with the old MTM methodology, where should they go? What should they do?
Yes. Make your way on over to markettaker.com, 2 T's in a row, and just click on Join Free. That'll put you on our email list. You'll get, notifications of our daily video where I provide tips every day, our newsletter, free online trainings. We're going to give you a whole bunch if you go there.
There you go, markettaker.com. Don't forget the second T for Theta. And while you're visiting places, Dan mentioned it earlier, public.com/options bootcamp. The place to go to get paid to trade options. What's better than that out there? And of course, while you're there, you can give them some feedback on what you like on their platform, what you like to see them add. They're loving what they're hearing from you folks. They're already renewing through the rest of the year here because they're loving what they're hearing from you folks. So again, a cheap, easy way to support the show and keep it coming to you for another decade is supporting our sponsor. Just going out there, public.com/options bootcamp. And once you're there, kick the tires and light the fires. Tell them what you like. Tell them what you like to see them add. It's a great way to support the show. And speaking of supporting our shows, we got more coming at you. So if you're not done with Dan's, we have to turn Wednesday into Dan Day here on the network, because I'll be back in a little bit with the newest addition to our network, the Futures Rundown. I got a feeling we're going to get crude today, so stay tuned for that with our good buddy, Mr. Dan Collins. Then I'm back again tomorrow for our usual Thursday doubleheader of the option block with our buddy, the Flow Master from SIBO, as well as This Week in Futures Options with our friends over there at CME, where we break down all the data and those free reports that you folks should be checking out. CMEgroup.com/TWIFO. Again, cost you nothing. Great free data. You should be using it. And then, of course, Friday, volatility views. So if you like this vol thing, maybe you're a little bit skittish about what's going on in the world right now, tune into Vol Views. We'll help you out there. And then one final time for the week for our pro friends, we come back after Vol Views to talk about options, oddities, the place to get access to all that fun, theoptionsinsider.com/pro. Then we're off for the weekend, mercifully. I can rest my voice, and then we're back again next week, all the way through to Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.